Okay, I think it is good to start now. A very good morning to everyone. Welcome to William O'Neill's India's pre-bell. This is Rajasekhar Kongari, equity research analyst with William O'Neill India. The date is June 13th, Monday. Let's start by discussing how the Nifty is placed at the current moment and what levels we are looking at the Nifty index. So, as you can see, Nifty on Friday, the action was very weak. It closed near the day's low on Nifty, and it also if you see, it is in a downward momentum actually. So that is the reason we have been on the sidelines in the market for last nearly 1 month. We have not added any stocks to our model portfolio. We are staying in cash, and that is the reason that we have advised our uh, customers as well to stay in cash because the current market is not conducive to take investments. And we are currently in a rally attempt. From here, we are looking for a follow through day. That is Nifty advancing 1.5% or more on volume higher than the previous session. I think it is very unlikely to see a follow through day today other than the coming sessions as well because the global scenario is deteriorating. If you see, most of the markets have been falling. I'll talk about how the global markets performed during the last week and Friday mostly in the coming slides. But what I want to say is there is a slight cautious. We are advising the clients to stay cautious because the markets are not conducive at the current moment. We are looking for a follow through day from here. From there, we'll identify stocks which are breaking out from their base patterns and add them to our model portfolio. So the last couple of times, if you see here, nearly 15,600 and 700 level, and Nifty found support and it rebounded sharply. But now, if that level is breached, we'll see another 200, 300 points down, nearly to 15,000. We can expect on the downside. And talking about key news that happened during the over weekend, US posted a 41-year high inflation. This has been the theme overall globally. All the countries, starting from Asia, Europe, and American countries, they have been reporting higher inflation rates, which are at 20, 30-year high inflation rates, which have never been seen in the last 20, 30 years. That is the reason global markets have been falling, and most of the central banks have also stepping in to increase the interest rates. So once the inflation is at a higher zone, central bank will come in to increase the interest rates. Once the interest rate is at increased, there will be very less demand for the loans because of high interest. That is thus money supply in the market will decrease. That is the rationale behind increasing interest rates when inflation is at a higher end. So in the last week, US has posted biggest weekly percentage decline since January because of this inflation data coming in 41-year high. So there are more fears of aggressive interest rate hikes by the Fed around 50 to 75 BPS they are expecting in the coming meeting. Bank of England, again, scenario is similar. Inflation is almost near 10% there. So they're also set to increase interest rates. As I said, global theme is the same. Indian markets also, we have seen a 40 BPS rate hike followed by 50 BPS rate hike by RBI. So it is everywhere the theme is similar at the current moment. German central bank had lowered GDP growth forecast to 1.9% from 4.2%. That is a very steep downgrade from 4% to 1.9%, nearly less than half. So this is very bad for the economy. A good thing about good news item that came in is that India's industrial production, that is IIP, came in at 8-month high for April, around 7.1% compared to 2.2% in March. This is a positive news for the markets, but this may not take Nifty higher because this higher IIP is because of lower base in the lower base effect. So it might not have that much positive impact, but this is a positive news. And Abu Dhabi Investment Authority, that is their sovereign fund, has taken 20% stake in IFL Home Finance Company for 22,000 crores, 2,200 crores. Sorry. So this stock can be under radar today. And State Bank of India, India's biggest bank, is saying that loan demand in the country is bouncing back. Even though the interest rates are increasing, the loan demand is increasing. That is a good sign in the economic front. And M&M also is setting up a tractor plant in Mohali. This is the first time they are setting a new plant in the last 1 decade. This is also a positive sign because they are seeing high demand from tractors in India because of good monsoon and rising in demand. That is the reason they are also started new manufacturing plant. And talking about how the global markets have performed, especially US markets, Friday have closed very bad. That is around 3 to 4% lower. S&P 3%, Nasdaq 3.5%. So Asian markets have taken the cues from the global Europe, US market. So they're also trading around 1 to 2% lower. Nikkei 2.6%, Kospi 2.7% down. And on the Brent crude side, it has fallen slightly $2 per barrel to 122 per barrel. This is because of rising COVID cases in China. So they are expecting lower demand for crude in China. So slight decrease in crude oil prices. So anything above $100 per barrel will hurt our India's finances. We are according to RBI growth estimate and inflation estimate, they have taken a basket to be around average price to be around $105 per barrel. So anything above that level will definitely impact badly to the Indian economy growth wise and inflation wise. USD INR continue to slide. Rupees at nearly at all-time lows, 78 rupees per dollar. So this is also bad. This weakening rupee is also bad for our economy. And SGX Nifty is also indicating a sharp lower opening, around 2% lower opening. Nifty closed 16,200 on Friday. So around 340 points lower expectations from SGX Nifty. So this is going to be a gap down session today's market. We are not sure how the market will trade after opening, but mostly it will be a gap down and further selling might happen as the session progresses. Talking about how the sectoral indices are placed at the current moment, most of the indices are in a rally. You can see here, starting from realty, bank, pharma, IT, most of them are in rally. Only FMCG and metals are in rally attempt. However, the overall benchmark index, that is Nifty, is in rally attempt. So this is the major index we are looking at. This Nifty index should be in rally before adding stocks to our model portfolio. So these indices which are in rally already, these are leading the market at the current moment. So when the market Nifty is changed to rally, from rally attempt, so most of the stocks will break out from these indices. So this is like a leading index at the current moment. And thanks for joining today's pre-bell. Have a happy trading.